Gary Korolev here, Sovereign Wealth Management. We have the passing of the new big beautiful bill, Donald Trump's baby. So that's going to have some effects for our clients who are taxpayers as well as investors. And so it makes sense for us to review and take a look at how the provisions of this bill are going to affect our clients. So let's take a look at some charts. The standard deduction when you're doing your taxes was a little bit over $5,000. At this point, it's over $15,000. And if you're single, if you're married, filing jointly, it's over $30,000 if you're over age 65. Let's start with individual taxes. When it comes to standard deductions, pre-2017, the deduction was a little bit over $5,000. Now it's actually closer to 15,000, and for those married filing jointly, it's around 29,200, plus you're getting an extra $1,950 per person if you are over age 65. If you're single, the deduction is 14,600. If you're head of household, it's 21,900. Again, there's a bump if you are over age 65. You get an additional amount. In addition to these deductions, if you have income from tips, up to $25,000 additional deduction, and up to $12,500 per year per person deduction for overtime. That's through 2028. The top tax rate is capped at 37% for individual income taxes. State and local tax deduction cap. This was a big deal, obviously, for folks who have substantial income tax they have to pay in their state and local taxes, people that live in big cities like New York. So you can see that the current cap was 10,000. Now that's been raised all the way up to 40,000. And that's for taxpayers who make 500,000 or less as a couple filing jointly, or $250,000 per person in adjusted gross income per year. So that's really going to help lower the amount of taxes you pay because you're able to deduct the taxes you're paying to the local authority from your federal income. Estate taxes and gift taxes used to be $12 million per person before the big beautiful bill. Now it's $15 million per person. So couples can pass on $30 million tax-free. That's helpful with intergenerational wealth transfer for our clients. Corporate tax rates, they've been locked in at 21%. So pre-2017, pre the Tax Cuts and Jobs Act, they were 35%. Now they're 21%. So the United States wants to bring back and support and grow that dynamism of the 1950s, you could say, of the Eisenhower years when America, in terms of its economy, was an industrial powerhouse and operating on all cylinders, so to speak, even turbocharged maybe. Venture capital is one of the strengths of the United States. And so what we see here is a way to entice people who are already wealthy to take very risky investments that perhaps they don't necessarily need to take, or make risky investments in potential new ideas, new technologies. And this is the qualified small business stock capital gains exclusion. Okay, so if somebody invests in a company which has aggregate gross assets of less than 75 million, and it used to be less than 50 million, but now less than 75 million. So this person is invested in this risky venture, and they keep the money invested for over 3 years. They can have up to a 50% exclusion from capital gains tax. If they keep the investment for over 4 years, then they get a 75% exclusion on the gains. And then over 5 years, they get 100% exclusion. And the maximum capital gains exclusion has moved up from 10 million to 15 million per issuer. So that's a quite enticing for those who invest in venture or in risky ventures, let's say in Silicon Valley or anywhere else where maybe high-tech startups and so on. We are actively looking at these themes because as we try to outperform for our clients, we want to make sure we're holding the companies which are going to benefit from any new legislation. And so industries that are likely to benefit are industries that are in the artificial intelligence and robotics areas, because that's seen as a big part of the future. So you'll see software and cloud, semiconductors, robotics, automation, and data centers. I don't think there's many that think that the US is going to bring back manufacturing and very low skill labor, repetitive labor jobs to the US. Those are likely to be more automated or stay abroad. But the US is really trying hard to bring back the higher end manufacturing to the United States. And really, some may find it surprising. One of the best investments that we have in the portfolios as a fund, as a index fund, exchange traded fund, that it's very hard to find small cap funds or small cap investments which outperform the NASDAQ. And this theme of American Industrial Renaissance has actually done a great job of outperforming a lot of the tech indices out there, because this trend of US reindustrialization has actually in stealth has been going on for at least a few years in the US. So it's great to see. Nuclear energy. Of course, with artificial intelligence, I probably don't need to tell you how much power it takes to run all of these data centers that are going to be supporting this new high-tech economy. And the base load power has to come from relatively clean sources, and uranium and nuclear energy is that source more so than any other hydrocarbon or any hydrocarbon. And plus, it is reliable, unlike a lot of the clean energy sources. So what's greatly encouraged and that's benefiting our portfolios is industries like uranium mining, next generation nuclear technology, modular reactors, utilities that are modernizing their grids, nuclearizing, so to speak. And you see this chart in gray in terms of the energy mix, and the post is the blue. So you see nuclear is likely to increase in terms of the mix of the US energy consumption. You can see it going up to 35%, and that's going to be at the expense of coal and oil. Domestic versus offshore manufacturing, of course, industrial equipment, local logistics, infrastructure is what's needed if manufacturing is going to take place more so in the United States. So we're looking at players in those areas that will benefit from this theme. Cybersecurity spending, obviously, that is a wonderful opportunity in terms of investment as the US takes on this great project of continuing or strengthening its lead in AI and other super high tech or deep tech type of technologies. Cybersecurity, obviously, in these dangerous times, is going to continue to excel. And as you can see, this chart pretty much straight upward. And then companies that are leaders in this space are going to do very well. Digital assets, blockchain. So this administration has been quite friendly to decentralized finance versus the old traditional centralized finance, like your old JP Morgans and BlackRocks and so on. So crypto-based, blockchain-based technology, token-based trading and so on are likely to do quite well, and we're actively looking at those investments in portfolios already. This is just the basics of what's in this bill. If you're looking for more information, let us know.